Let's move on to Wall Street, where the index futures are a little bit changed today in the afternoon. Investors took a backseat following a rally in the previous session that returned major indices near all-time highs. And those are the three major indices if you know what the global marketplace looks like. So let's start with the Dow Jones Industrial Average, up about 1/10% early today, while the futures for the S&P 500 slid about 0.03%. And Nasdaq futures is looking flat at 7525.50 on the counter. Take it away. Let's look at most of the markets closing mostly higher on Wednesdays. Investors took an explanation of trade tensions between U.S. and China in their stride. So we're taking a look at the Asian Pacific region. Australia, the benchmark ASX 200 rose about 0.5%. Japan's Nikkei 225 was much better, 1.34%. And the topics, that's also on the Japanese exchange, added 1.57%. That's solidly good on the side of the Japanese because the Bank of Japan says it's keeping its monetary policy steady and maintain an upward view or upward view on the economy. And that's the story there. Move on to South Korea. Look at the Kospi, down by 0.2%. In the Chinese region, the Shanghai Composite gained about 1%, and the Shenzhen Composite added about 1.09% on Wednesday. It's about dinner time as we speak in Japan, in Tokyo. Let's check from South Africa, the most advanced economy on the continent. Listed data from the Statistics Office shows the country's headline consumer inflation declined to 4.9% year-on-year last month from 5.1% in the month of July. On a month-on-month basis, inflation in South Africa contracted 0.1% last month after rising from 0.8% in the previous month. Economists had expected inflation to have accelerated at an annual rate of 5.2%. Channels Television South Africa's correspondent, Napoleon Koma, sat down with an economist at Absa Bank, Mielani Matuleke, and here's what he says.
The stuff that you highlight, I think, just speaks to the dilemma that actually is faced by the South African Reserve Bank's Monetary Policy Committee as we go into that meeting. So we do know that inflation risks have gone up quite significantly, partly because of higher oil prices and the significant depreciation in the exchange rate that we've seen. But at the same time, economic activity remains very weak. As you know, South Africa is now in recession for the first time in over a decade. So ordinarily, weak economic activity would require an accommodative monetary policy stance, but rising inflation risks at the same time require a tighter monetary policy stance. So it is a big policy dilemma, I think, that the SARB is faced with here. But in our view, we think that given the weakness in domestic demand that we have faced here, we think the South African Reserve Bank is likely to keep interest rates on hold. And I think particularly because of this issue that you raise, what does this mean for the average consumer out there who's already had to take some really big tax increases at the start of the year, a big erosion of real disposable income from higher fuel prices. So we think at this stage, the SARB does have a bit of scope to be sympathetic and keep interest rates on hold.
Economists expect that the Reserve Bank will be cutting GDP growth forecast this year from 1.2% to 0.6% or 0.7%. Why is that?
Yeah, so I think the key issue here is if you look at growth in the first half of the year, I mean, which we just spoke about now briefly, it's disappointed quite significantly. I think at the start of the year when we had a political transition in South Africa, expectations were that this might be sufficient to lift growth, to provide a bit of a boost in real private sector investment in particular. But the reality is that we haven't seen that come through as yet. So growth in the first half of the year has disappointed a lot. And I think the expectation that the SARB will adjust downwards is more a reflection of the disappointment that we've had in the first half of the year. But also, I think the growing realization that even in the remainder of the year, we're not going to have particularly robust growth.
Do you think that the Reserve Bank governor will keep the repo rate on hold this Thursday?
Yeah. So I think for me, there's a couple of things that matter here. Sure, inflation seems to be going up, but critically, it's still not above the upper limit of the SARB's 3 to 6% target range. It's still quite comfortably below that. Moreover, when you look at core inflation, which is where if you remove fuel prices, core inflation is even lower than that, currently at around 4.3%. And I think even in the data that we're going to see, we're not going to see a strong pickup in there. So it's pretty clear that demand-driven inflation pressures are still quite weak. Economy is still quite weak. The consumer is still quite constrained. So even though you do have these growing risks on the inflation side, we just think that the SARB does have a bit of room to keep interest rates on hold, just given the state of the economy.
Okay, so we're just going to about 45 minutes before the closing bell on the Nigerian Stock Exchange. We're checking in with the markets there, and it's looking this way when we come back.